welcome to the Global View on this Monday. Well, let's get across what's moving macro-wise. Consumer expectations for inflation in the year ahead in the US rising in November to a 7-month high of 4.4%. That's according to a University of Michigan survey. San Francisco Fed President Mary Daly has said that she's not ready to say if the Fed is done raising interest rates, saying it needs to watch the data and stand ready to act, saying there's a lot of demand for certainty that we would say we're done or we're definitely hiking. But the truth is, we don't know. Well, US Treasury yields were mixed on Friday, with those on the long end modestly lower, with the market looking to key inflation data this week. The 10-year yield slipping to 4.6% and the 2-year modestly higher at close to 5.05%, having posted its biggest weekly gains since May. And the US dollar dipped against the euro but gained against the yen, with the Japanese currency on watch for possible intervention as it holds near a 1-year low against the greenback. The Aussie dollar trading at 63.6 US cents. All right, well, our focus today is on India and the opportunity there. To get across it, we're pleased to be joined by Riaz from Banyantree. Zach, a very good morning to you. Thanks for joining us. All right. So let's take a look at what's going on in India at the moment. And you're drawing some historical analysis here. I see that you point out that the economy underwent something of an inflection point back in 2006. Talk us through that and what's happened since then.
Yeah, sorry. Thanks, Andrew. So we've been following India for a while. Last 5 years, we've been talking about India as a key market that investors need to get across. Obviously, in the last 2-3 years, or whenever the geopolitical issues with China really took hold, India became a lot more important as a diversification strategy away from China, not just supply chains, but also from a consumption perspective. India does have a, depending on whose numbers you read, either the largest or the second largest population in the world. Now, what's interesting is, there's geopolitical issues and reasons to be there in India, but India as an economy obviously is growing at a rapid rate, and a lot of attention needs to be placed on that. And one of the parts that we've just recently been highlighting is that is the consumption story in India could really take hold this decade. And the comparison we're making is to China, where China was actually back in 2006. And the specific economic data we're referring to is GDP per capita, which is it's a sign of economic growth, but it's also a good sign of economic well-being and the overall health of the economy. And you can see in the dark blue line is China and red is India. China back in 2006 hit that inflection point that a lot of people refer to when the economic GDP per capita hit $2,000, and you can see China absolutely hit, and that's often called as a inflection point for a lot of economies. India just recently hit that, and so when you put that together, if your history is a guide, then given everything that we're hearing about India, a lot of people wanting to invest in India, the big companies like Apple and whatnot moving to India, it could very well follow the same path that China did. Now, remember, Chinese consumer is one that is some of the most sought after consumers, not just in China. Luxury brands actually target Chinese consumers, what they did for the last 10-15 years, traveling through developed market tourist sites. So I think the same conclusion can be drawn for India, and we believe that the consumer story in India could be very strong if history is a guide and GDP per capita is a guide, as per the experience with China.
Specifically, now, though, Zach, what's the catalyst going to be to actually lift that GDP per capita then?
Well, it's the economic growth. India's got the best economic growth in the world right now. They're growing at 8%. Now, to be fair, for India to actually maintain enough job employment opportunities for its fairly healthy and young population, they need to grow at that rate as well. So they can't grow at a rate around 3 to 4%. That's just not going to suffice. But it's like I highlighted, it's the economic growth from growing Indian middle class. That's a big plus. And then it's also the attention of foreigners, both from looking to move their supply chains into India and focusing on local production, which means local jobs, but then also the consumption story. We've been talking to a lot of Indian counterparts, and one of the anecdotal evidence we continue to hear, there is a real motivation within the Indian middle class wanting to spend. They want to upgrade. And that necessarily doesn't mean they want to upgrade from, middle class brands to Louis Vuittons. That's certainly there as well, but they just want the best of everything. And so maybe that's a bit of a COVID hangover or whatnot. So that's one. The other point that I'll just highlight is that not too many people appreciate the lower class really was hit. The lowest socioeconomic class of India was really hit during the COVID. That means, your middle class and high class people who use a lot of these people as tradies and help around the house, they couldn't move because of lockdowns and whatnot. So they were really hit hard. At the same time, that middle class and upper class wasn't spending as much money on these guys. Now with the obviously restrictions being lifted and whatnot, movement in the economy and the broader kind of positive momentum, means there's a bit of a catch up to be played within the lower socioeconomic areas as well. To call them the semi-rural and rural. So when you put all that together, the overall picture from a consumer perspective, from a consumption perspective, could look very, very interesting for India for the next 10 years.
Right, okay. But it doesn't come without risk. And I see that you're pointing towards political risk at this point.
Yeah, absolutely. You need to be aware of what are the downside risks, and this is one risk we certainly believe is underappreciated by the market, and that's a political risk. And what I'm specifically referring to, again, this is not rocket science. Everyone knows this. There's a election coming up next year where Prime Minister Modi will go up for re-election, and obviously we know that he's been a very strong figure in this Indian growth revival recently. So long story short, if BJP was to lose its majority or lose the election, if you go back to 2004, when last time BJP-led government lost unexpectedly, the equity markets in India crashed by 20%. Obviously, they recovered, so it could be a buying opportunity. Now, we're not saying the BJP of today is different is same as 2004, and certainly we're not saying the economic conditions and the market movements are the same. In fact, one thing that does make us a little bit nervous, the Indian stocks have rallied so much, and they typically trade at a premium, but even from that respect, they are trading at pretty healthy multiples. So there could be a potential catalyst, and the alternative in this election in 2024 in April is that 28 parties have banded together to go up against the BJP. Now, mathematically, they can win. So overall, the risk is that downside from BJP loss.
Okay, so Zach, let's then come to the opportunities as they present themselves. And you come up with one stock I see here that is exposed to that Indian growth story. Interesting. I discussed this stock last week with a small caps Findi here. He's also quite excited about it. Tell us about Findi.
Yeah, look, very simple story. I think the economics of this business look very interesting. They're expected, as guided by management, 24% revenue growth next year, FY24, and EBITDA growth of 41%. I think that's bankable. They've just, end of last week or thereabouts, they've just announced, end of October actually announced a contract with State Bank of India. And the key point here is, like, when you talk to developed market investors and you talk about ATM, which is one part of their business, which is the contract that they won, which is worth 250 to 620 million over the next 10 years in terms of revenue, and EBITDA of 250 to 280 million over the next 10 years. Now, you just do an NPV analysis just on that for the next 10 years. You're not getting a NPV of $29 million, which is what the market cap is right now. But the key point here is ATM is a very important functioning part of the Indian economy. We as developed world investors may think this is a 1990s story in terms of ATMs, but interestingly, ATMs, even online purchases. So this is interesting. Even online purchases, the method of payments of online purchases is still cash. So people are starting to get more and more payments made to their bank accounts. That's because that's what the Indian government wants. They want to lift the cash economy into above the the ground. And what they want is more exposure to be able to pay taxes. But people still trust cash. And you've seen the circulation of cash increase in the Indian economy, in fact, for the last 10 years, and that's expected to continue increasing. So ATM is a nice cash cow for these guys. And then obviously they've got the digital payments business, which is bringing the Indian economy into the new digital age, which the rest of the world is experiencing. So when you put that together, you have a micro cap which is not loss making, which is actually spitting out decent cash, and that's expected to continue. So it looks like a very interesting story from my perspective.
Zach, those Australian companies that are India focused are few and far between. Does that surprise you?
In terms of the opportunity set?
Yeah.
Yeah, look, absolutely. But I think this will change. I think more and more study tours, more if you're specifically relating to the question to Indian companies, Australian companies exposed to India, I think that will change. You're going to see more and more companies rejig their focus to Indian and the Indian economy. And I think there's not too many, and this is why I think Findi kind of sticks out. It's a very pure play, because right now I've highlighted in the past on this platform, the likes of IDP Education, the likes of REA. REA actually has a very good Indian platform for real estate. IDP Education has a significant amount of Indian student that it makes money off. It's got a significant operation there, but there's not too many guys clear, pure plays. But there are opportunities there. But I would suspect over the next 10 years, those opportunities will certainly increase.
Zach, great stuff. Thanks for talking us through that. Thanks for joining us in Banyantree.
Thanks, Henry.
All right, that is the global view on this Monday. Just a quick check of where we're likely to get going. SPI futures up around a third of a percent there. So we are looking for a positive start to the week. Stay with us. The open is just around the corner.